You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's Friday. It's 1 p.m. Central. It's 2 p.m. Eastern. Do you know where your volatility is? Let's find out together. It's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. Hope you guys are enjoying. Seems like you guys are. Certainly are flocking to the content in ever-increasing numbers these days. We love all the new listeners who are flocking to and discovering this program and indeed the whole network. If you haven't upgraded to the full network, first off, head on over. You're missing about a dozen or so other programs you guys could be checking out in the interim between Vol View shows. And of course, wherever you listen to this program, make sure you leave a review so other folks can continue to discover and enjoy this content. These days, things are topsy-turvy, more important than ever out there. And of course, keep those questions coming. We do love to hear from you guys out there. And joining me on the program today, let's see who else we're hearing from on the old Vol Views show today. First off, let's go out. Maybe he's in the hinterlands of Chicago. Maybe he's in Detroit. Maybe he's in a Costco near you. We don't know. Let's find out together. He is the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program. Where do you find yourself today, sir?
You know, interestingly, I was supposed to go to Costco today, but I am not anymore. I am in, and I'm still in one of the 10 towns that changed America. Beautiful, historic, lovely Riverside, Illinois.
I've got to add Austin to that, soon to be Austin, to that list out there one of these days. I haven't been in a Costco. I can't remember how long since I've been in the Costco. It's been many months, so I don't envy you your trips to the bean aisles in the crowded Costco near you. And also join us. I'm not sure if they have a Costco near him. I guess we'll find out. He is Mr. Matt Amberson, the founder over there at ORATS, a.k.a. the guy who creates all those cool earnings move and earnings move results reports that you guys mainline throughout the year. Mr. Matt, welcome back to Volatility Views, sir. You know, you're on. That means only one thing. It's got to be almost time for earnings, is it not, sir?
Yeah, you used me for my earnings, Mark, but I'll respect you in the morning. I have my gloves on, my masks on. I'm keeping you safe. I've got hedging strategies. I've got ways to trade. So come, let's get going.
You're right. We do use you for your earnings, but it's all it's all really in the service of the greater good, sir. So glad you could join us here as we head on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Vol Review, the portion of the show where we talk about what the heck's going on in the volatility trading landscape, the trends, the developments, the unusual activity, all that good stuff for the entire week into today. In fact, a couple of weeks now, because we didn't have a show last week due to the July 4th holiday here in the U.S., and yet another weird end to another weird week. Again, just cut it, record it, play it every week these days, and that's pretty much the show. Because we started off, seemed like the bulls were firmly in charge there. China giving the markets a nice boost out there, saying, you know what, we think we want a nice bull market to support our economy. Nice how you can do that in an authoritarian regime. Let's just have a bull market, and it all happens out there. Then, of course, middle of the week, it seemed like lingering coronavirus concerns were starting to overtake the bull, taking a bit of a break. Some of our first sell-offs in a while. Haven't seen those really since late June. The bull has pretty much had the bit in its teeth otherwise for the entirety of the last few weeks. And then today it seemed like another day where coronavirus concerns are going to trump everything else out there, pun intended. And then it seems like maybe some news out of Gilead and some other developments out there. Returning the worm, because we were down, then we were mixed heading into showtime, and now as the show is kicking off, we're firmly in the green out there. Rare case where the Dow is leading the charge and the NASDAQ is the laggard. You don't see that too often. The Dow up over 1%, about almost 1.2%. The S&P up nearly 0.75%, and the NASDAQ up a mere 0.15%. That's a huge swing from where they were down earlier in the session. So a lot of interesting stuff to parse there. Our old friend VIX Cash come into showtime was at VIX and Spikes were both at about a 28.5. That puts them down about 5.5 on Spikes and 6.5 on VIX Cash. Of course, they have since eroded more as we head into the start of the show here. VIX Cash is now at about a 27.5, puts it down about 7.5 handles from our last show, which remember was 2 weeks ago, listeners. So that's a span of 2 weeks there for that vol erosion to kick in. Similar levels out of Spikes. Spikes at about 27.75, so it's down to about down 6.25 handles or so from last show. And our old friend VVIX, which is the vol of vol, volatility has some froth to it, but it has come off a wee bit. It's down to about 112. It puts it off about 20 handles from where it was 2 weeks ago, north of that 130 level out there. So a lot to unpack, a lot to unfold. It's another day that ends in Y. I mean, something crazy is afoot. Now, let's kick it off with our guest, Mr. Matt, holding down the MIAX hot seat today. Mr. Matt, we'll get to all the earnings goodness in a minute, but first off, there's a lot to unpack just on the vol side of the space. What is catching your eye out there these days, sir?
Yeah, Mark. I mean, you can't keep a good market down. I thought we were going to have a little bit of a bearish, it seemed like they just ripped the face off of the market and then it just kind of drifts back up. So, this has been a surprising market. So many negatives. I mean, with the dividend cuts and, the coronavirus outbreaks and the lack of vaccines and you'd think this market would be down, and the China trade war. You think the market would be down, but it just keeps battling back. And volatility still, wants to stay up, but it's 28, 27 VIX, and we've got a odd-shaped VIX term structure. We've got a big bump in it where the election's going to be, and we're hearing all kinds of stuff with Trump and Biden, and we put an implied volatility move in for the election. So basically, what we're looking at is the volatility after the election versus the volatility before the election in the S&P 500. And it looks like the market's implying about a 4.8% move that day, which is it's interesting to watch that fluctuation, but. It's a crazy looking VIX term structure. It's a crazy market, Mark. But good to be here with you.
Yeah, that makes vol views fun these days. It's just, if you want a silver lining for all the madness that is gripping the world right now, it certainly makes vol views very interesting. It makes the quiet, tranquil days of 2017 seem like a distant memory where we were scratching for things to talk about. VIX was heading towards the dustbin. There was literally nothing happening from a vol perspective. And now here we are a few years later, and there's almost too much to squeeze into one show every week. That's where we find ourselves, listeners. May you live in interesting times. The Chinese were correct on that front. Mr. Meatball, what interesting times are lighting up your tape out there, sir?
Yeah, I think the big piece is the way this rally driven by about 8 or 9 stocks continues to take hold. Today is one of those days where maybe those names are off a little bit. But in the last 6 weeks, we've seen Apple, Microsoft, and Amazon all surpass $1.5 trillion in market cap. In the face of you got to wonder about some of the earnings on certainly Apple, Amazon. You could, if you were going to tell me Amazon was going to go off to the races during COVID-19, you could sell me on that story. Some of these other ones, no. Meanwhile, kind of all the other major indexes and sectors have just been kind of face punched until today, where today I'm looking at, materials are up 1.5%, financials, which have been absolutely taken out to the woodshed, are up 3%. The industrials are up 1%. About the only thing that's actually down is XLK, the technology names. So that is, I think probably the most fascinating piece for me.
Yeah, I know that's been kind of a go-to for you for a while. Your refrain there on the absurd levels of concentration in supposedly diverse indexes like the S&P. Well, if you're into that, listeners, it's getting even more concentrated. In fact, some data coming out, this is Bank of America, courtesy of Bloomberg here, showing the S&P 500 more concentrated in its 5 largest stocks than ever before in the history of that index. It's like about 23% of it. Microsoft, Apple, Amazon, Alphabet, and Facebook. The other closest parallel we have outside of this recent uptick we have over the course of this past year or so, really have to go all the way back to 2000. And back then, obviously, S&P was a different beast. The top 5 names there were Microsoft, GE, Cisco. Man, how the worm has turned out there. Intel and Walmart. So Walmart not even in that conversation anymore, even though it's obviously still a big player out there. It's just tech has just supplanted everything else. The only name that's still around from the 2000 era, of course, Microsoft. So, Mr. Mark, that drum you've been beating is getting even more concentrated than ever, sir. What are your thoughts on this, just some might say alarming level of concentration we're seeing?
Yeah, I made that comment yesterday that, if you own the NASDAQ and the SPY and think that you're diverse, you're actually Texas hedging yourself. And how about the fact that Tesla is now the 6th largest company in the NDX? If you own Tesla, if you own the NDX, you are putting let's say if you put $100,000 in a QQQ portfolio, 48,000 of that is going into Apple, Microsoft, Amazon, the Google twins, Facebook, and Tesla. It is like nothing that we've ever seen. And then when you buy SPY, those 5 top names make 23% of that portfolio. You're not getting the diversity that we used to get. You add in, a few more stocks out of the Qs and the NASDAQ and the SPY, and it gets worse and worse. Intel's in the top 10. NVIDIA is in the top 10 of the Qs and the SPX. I've never seen anything like this. And it's not just that it's, the individual companies, that these companies are all super related to each other, super correlated, and all in one sector. So the fact that when you buy the S&P, you're not getting financial exposure, you're not getting energy exposure, you're not even really getting industrial exposure anymore. You're maybe getting a little bit of biotech out of Amgen and a little bit of medical out of J&J. I know this is insane, but the Dow Jones Industrial Average with 30 stocks and a price weighting system is a better diverse vehicle than an index with 100 names and an index with 500 names. I know, Matt, you had something that you were kind of looking at this as well. This is like nothing I've ever seen before.
Yeah, if I could jump in, Mark. I mean, if you look at the relative performance of the NASDAQ 100 versus the S&P 500, and your point's well taken, but it's 30% higher over the last 12 months. But the crazy thing to me is, you mentioned the Dow, and that's relatively equal weight. If you were to equal weight the NASDAQ 100, it would have performed 16% worse than it is right now. That's crazy to me.
I mean, yeah, you could make an argument. I've been telling the people now for probably about 2 months. I think, at this point, with how much these have moved, a way to stay long the market and maybe rebalance your portfolio a little bit is to look at something like an equal weighted S&P index, or tech, buying the triple Q and then putting the rest of your money in a basket of XLI, XLF, XLE, and then going out and buying Johnson & Johnson and maybe Amgen or Biogen, and you have a portfolio that is going to perform better than the S&P and be far more diverse.
Since we're talking single names here as well, let's get into the elephant in the room. I joked at the top of the show, Mr. Matt, that's why we bring you on here every cycle. But there's a lot of data to mine, a lot of data to parse, and we know, despite us warning you guys against it, a lot of you like to watch and indeed trade names through earnings season. Last season was certainly a surprise to me, probably a surprise to a lot of you out there. You guys can see all the earnings move and earnings move results, and indeed the earnings season report that Matt and his team produced over there at theoptioninsider.com. If you check out that season report, you'll see things pretty starkly underperformed compared to what was being priced in, which to me, I did not expect that at all. I thought, given the fact of how little we know about the future right now and the fact that every major name on the planet was kind of just eschewing guidance completely, I thought for sure we'd see a lot of volatility, and yet we kind of saw the opposite. We saw a dramatic underperformance. So, Mr. Matt, if you have any thoughts on what we saw last season, have at it. And then more importantly, let's get to the good stuff. Let's get to what's coming up, what's on your radar. What are you expecting with some of the big names from the season coming up, sir?
Yeah, you're right, Mark. I was shocked of a lot of things. I've been watching the markets. I started with Lehman Brothers in 1982. So I've seen a lot of the market, and I've never seen anything like this. And I was expecting the market to come back to reality when we started to see the April numbers, the earnings come in. But it just seemed like the Fed helped a lot, but they were just blowing it off almost. I mean, we saw some pretty good implied earnings moves, and the owners of options just lost. The stocks did not move as much as the option owners thought. And this season they're actually implying a little bit lower than last season, so they're licking their wounds a little bit. But this first week, however, we're coming up on some of the banks announcing, and we put out the earnings report today, and what we're seeing is many of the names. Like Wells Fargo, the straddle is so much higher than the past earnings move would expect, in Bank of America and such. So it looks like these early names, whereas all the other names that we've implied are somewhat above. But I think that the option holders, again, I'm gonna predict that you can't hide anymore. I mean, you're going to have to come out and show how you've done. And you're going to have to provide some type of guidance for these analysts. And when people are crunching these numbers on a market-wide basis, you're just going to see the valuation. I mean, how is it possible to support this valuation? I mean, that's rhetorical. But then you might say the Fed. Well, we saw the first week where the Fed kind of contracted. So, I don't know. There's got to be some fireworks. We put out this earnings report. It's showing a lot of green, meaning the implied moves are a lot bigger than expected. Next week, we kind of start off 14th, 15th, and 16th. There's a lot of names coming out I think it's going to, we've seen in the historically, however, the first week isn't as volatile as the upcoming weeks, but I still think we're going to see some strange things happen, Mark. Some strange volatility happening next week.
Yeah, I think we're set for actually a pretty interesting first week because I was looking at your report here, and it's starting to price in what I expected last cycle, which is a little bit more volatility. But as you mentioned, it's very limited to the financials, so Wells Fargo and others, and that's certainly understandable. The financials have been devastated by this recent development out here in the marketplace and the pandemic and everything else that has gone along with it. So they should rationally be pricing in a lot more volatility than perhaps they priced in the past. And financials, as we all know, kick it all off here coming up. So it should be an interesting week. Let's give you some couple of hard numbers to crunch here really quickly. Matt's talking about Wells Fargo. They're popping off on the 14th before the bell. Again, you guys can check out these reports for yourselves, theoptionsinsider.com. Click on the options news and articles tab. Click on the options, or in this case, the ORAT's earnings move reports, and you'll see all this good stuff for yourself. Coming in, they're pricing in. Stock was at 93.30. They were pricing in. Let's see. Actually, I'm sorry. Wells Fargo was at 24.55. They're pricing in $1.85, and in the past they've delivered 59 cents. So they moved. So that's quite a hefty premium. J.P. Morgan, something similar. Coming into this report, they were at 93.30. They are pricing in $5.26. In the past, they moved $1.64. Like this is orders of magnitude more that we're pricing in here. So just gauging this alone, Matt, this sounds like week one, maybe a little bit more fireworks than we've seen in previous seasons, sir.
Yeah, and it's a good point that you make because some of the other names, the more tech heavy names, aren't pricing in that big of a earnings jump. Although almost all of them are in the green, meaning they are implying a bigger move than expected. But yeah. These banks, another thing that happened, Mark, was, the Fed came out and said, listen, you can't pay a dividend if you're not making any money. And so we're going to take over essentially the dividends that you're going to pay. And so I think what people are gearing up for is some dividend talk from the banks, and basically taking cover from the Fed and saying, hey, we have to cut our dividends. So I think that might be priced in there as well, Mark.
You're Mr. Dividends out there. I thought of you yesterday when we were doing our TWIFO show, Matt, and listeners, you should check it out if you missed it, because we talked about an interesting subject that I hadn't really thought about before, which is the volatility of dividend expectations, which is, again, not an area we talk about too often. They have those S&P dividend futures over there on CME, and looking at what they've been pricing in over the past few months compared to the nadir of the market in mid-March versus the nadir of dividend expectations, which came a few weeks later on April 3rd, and then how much they changed. They're up about 40% from their interesting paper, Matt. You should check it out from Blue and his team over there on the CME research team. Since you're the keeper of all earnings data as well, sir, I think you'll find it fascinating. Who knew dividend expectations almost as volatile as the underlying stocks themselves, sir?
Oh my God! If you want to impress a girl on a date, start talking about the volatility of the implied dividend, Mark.
There we go. That's first date talk. If ever there was, hey, get a nice bottle of wine, sit down, and then, you start discussing the level of volatility of earnings expectations in the S&P 500 versus maybe 20 years ago. See how fast she gets up and leaves. Speaking of the case for vol out here, let's look to the futures. Matt alluded to the VIX futures curve out earlier. It's no longer in backward town like we were not too long ago out there, as we're starting to see maybe some other shoes out there starting to drop, starting to see a little bit of a curl up there in the front portion of the VIX futures curve. Come into showtime, we saw that cash nice and back to normal below where we were seeing the front future. That July futures at about a 29.5 even when we kicked off the show. So we saw that about a 1.2 point premium to the cash, and we saw the AUG future was not quite 31, about 30.85. That puts it about 2.5 point premium to the cash. Mr. Meatball, anything catching your eye out there from an overall VIX futures term structure perspective these days?
Yeah, it continues to be really flat, continues to be really reactive to the overall market. Despite TVIX kind of coming off, I continue to be really pretty fascinated by how quick the VIX futures start moving. And I think it just shows you how many people are actively now using VIX futures as a part of their hedging programs for near-term moves, even if there is fewer moves on, fewer long-term, static hedgers, we are seeing a lot more just-in-time hedging than maybe a lot of us know.
Just-in-time hedging. I like that. It's spread from the manufacturing world. Why hedge a month out when you can hedge day of? Is that what you're saying, sir?
That is exactly what I'm saying. I think you're seeing a lot of day of, and you're seeing programs step in and move it. It is quite reactive to moves in the cash, more so than it has been in the past. And, just anecdotally, I don't have any data behind that, but certainly feels that way with how it's been moving. Yesterday morning is maybe a good example in that VIX futures were sky high, and the VIX was up 3 points on a 50-point move. It was back over 30 to 32, and just really fascinating stuff. I do think that there is a lot of money terrified of what's going to happen when a big seller dumps some Apple and everything cascades.
I do like that notion. That's kind of the use case for the weeklies, right? That's why they exist. So you could do those types of just-in-time trades around an earnings event or whatever the case may be. Sounds like some folks, at least, taking advantage of that bite-sized near-duration type contract. Let's skip away from near duration for a second. Let's go a little bit farther out, even though it isn't that far out anymore. It's always seemed like that election bump we were talking about at the beginning of the year. It seemed like it was so far down the road, that bump in the VIX futures in that October to November timeframe. Back in January, it seemed like that was an eternity away, and January now seems like it's an eternity from now as well. So much has transpired since then. We had a brief period, a couple of days at the beginning of the year where all was right with the world, and then we assassinated the Iranian general, and it kind of all went to hell in a handbasket after that. But I digress. That bump out there around the U.S. election cycle, listeners, it has persisted. We talked about it back in February when the sell-off first really started picking up steam with the coronavirus, and yet that election bump was still there. It was still demonstrable, still measurable. I remember some presenters at RMC actually took some time out to kind of quantify and talk about it because they were surprised at how much it persisted, given everything else that was going on in the front portion of the curve. And over time, it has still persisted and indeed evolved. And now we're heading into, middle July here. And I don't know if we know any much more about the election cycle than we did before. We talked about polls yesterday and the lack of accuracy of those. I won't go down that rabbit hole again out there. But to say we have any notion of a front runner now with July is so far away, it's really kind of ridiculous. But the VIX future is still pricing in some interesting stuff. Matt, I know this has kind of been a talking point of yours for a while, since January. And if anything, that premium has not only persisted, but has kind of evolved. What's been catching your eye out there in that portion of the term structure, sir?
Yeah, so what we've tried to do is do the same type of analysis that we do for earnings. So we'll look at the implied volatilities before the event, look at the implied volatilities after the event, and go through some pricing of synthetic straddles and see what we think the implied move is for one day. So that's approximately what we do for earnings, but we're doing the same thing. Obviously, there's no earnings in the SPY, but there is a big event, that earnings in November, and there aren't that many expirations out there, so it's a little bit tough, but we're doing it nonetheless. And I mentioned earlier that right now it's 4.8% is the expected election move that's implied by the volatility of the S&P 500. Now, it's been pretty constant around that. I was interviewed by one of the newspapers, and it was 4.6 a couple days ago. But before all this coronavirus fun, what was it? There was still a bump out there, but it was. Let me check my number here. It was only about 3.2%. So it's getting more volatile. The market definitely seems like there's a lot more, question as to what might happen out then. Is it Biden? Is it Trump? Certainly, I think Biden now has, more of a chance of winning, especially, if you look at the bookies and all that. So it's definitely being priced in there, and that's going to be a fun one to watch, Mark. I'm famous for describing the Mount Vesuvius of the term structure, but that's what it looks like. It looks like more of a not a Mount Vesuvius, but more of a hill. a molehill. And at the apex of the VIX futures term structure is that October expiration, and people might wonder, why October? Well, the October covers the November election, and so that's the highest point of the VIX futures term structure, and then it kind of bumps down and it goes down like a regular hill with that as the apex. So it's definitely that has that looks like it's just pulling up the whole term structure and that election mark.
Yes, your infamous Mount Vesuvius. I believe that goes back to our time spread discussion a while back there on Options Bootcamp. Check it out. I know a lot of you have. You guys have been mainlining Bootcamp these days. Can't say I blame you. It's a good time to catch up on your options learning out there. Speaking of learning, let's learn what's going on out here in the volatility options this week here. Spikes options, OI, pretty similar to our last show out there. Folks obviously waiting for the future out in that land. Come into showtime. VIX options wasn't exactly knocking the cover off the ball. There were only about 214,000 contracts on the tape as of the start of the show. Let's see if that's bumped up, and it's up to about 303 now, so a little bit better. The ADV is 402, so that's a little something, I suppose, but still, I mean, given the massive swing we've seen in the indices just in the last few hours, you might expect a little bit more out there. Let's see what's lighting it up from an overall top hot VIX positions out there. What do people have on in VIX right now? What are the top 10 positions? Let's find out. Only cost you 81,000 contracts to break into the top 10 in VIX land. I get you to the July pars, those pars that I believe it was Bloomberg wrote about so infamously way back in when all this madness first popped off. A bunch of them still open to the tune of 81,000. Then we got 87,000 of the July 50s for number 9. Number 8, our first put on the top 10 here, 94,000 of the July 28 puts. Then number 7 takes all the way to number 7 to break into the 100K realm. We get to 107 here, 107,000 of the July 20 puts. Number 6, $1.14 of the July 28 calls. Number 5, $1.15 of the AUG 60 calls. Number 4, $1.18 of the July 35 calls. How much more reasonable do those seem than the pars now? That's the kind of world we're in, listeners. Number 3, our third put on the list here, 119,000 of the July 30 puts. And then number 2, $1.25 of the July 32 halves. And rounding out the top 10 out here, only cost you 134,000 to dominate the top 10 this week. That usually is enough to maybe get you into it on most active weeks. That shows kind of how much OI has come off of late. 134,000 contracts for the July 25 puts. A lot of those popped off earlier this week. We'll get to that in a minute. About 6.3 million contracts outstanding, about 3 million on the puts, and about 3.3 million on the calls. So calls and puts are much closer in net OI. Usually we see a lot more, obviously, call love out there in VIX land than usual. Like I mentioned, there was about 302,000 contracts on the tape as of a few minutes ago. The big prints out there today are the July 26 puts with about 40,000 contracts and the July 28 puts with about 21,000 contracts out there. There's only kind of prints worthy of note. Thursday was also a kind of light day, only 277,000 contracts on the tape. The big prints, 15,000 of the AUG 29 puts and about 15,000 as well of the July 35 calls, along with nearly 15,000 of the July 29 puts as well. So maybe a bit of a funky risk reversal there. Wednesday, even lighter. Only 238,000 contracts on the tape there. The big prints, July 25 puts for about 20,000, 14,000 of the AUG 90 calls. That's an interesting strike. And 11,000 of the July 30 puts. Tuesday, a little bit more paper, 371,000. I mentioned those July 25 puts, listeners. They are our number one with a bullet right now with 134,000. 105,000 of those came on Tuesday. So of that 371,000 contracts, 105,000 of it was those July 25 puts. It was part of a funky 1x2, actually 2.5, as the net volume parses out, because also 40,000 of the July 28 puts went up in a bit of a 1x2, maybe 1x2.5 net total out there of the July 25-28 ratio put spread. I saw it going up 25,000 by 50,000 one time. Then it was like a little more filed in to the tune of 15,000 more on the 28 puts and about 50,000 more, obviously, on the 25 puts. So somebody liking that, selling one, buying two, doing it for about 73 to 75 cents out there. So an interesting spread out there. Then Monday rounds out our week. It was actually the most active day until you maybe today can beat it. We'll see. 387,000 contracts. No large, gigantic prints to really note on Monday. Just the big prints were about 20,000 of the July 25 puts. Again, that strike people liked early in the week. And the July par calls, our old friends, 20,000 of those bad boys going up on Monday as well. Mr. Meatball, let's start with you. Any of these prints catch your eye? Did you notice this 28-25 1x2 put spread? And if so, what are your thoughts on that one, sir?
I like that one. That's a pretty nice play on vol easing back a little bit, but not collapsing. And that's been the trade that has made sense. I didn't see it, but I actually did something very similar this week as well. It worked pretty darn well if you timed it well.
You want to regale us with yours as well, sir, or your similar strikes?
I did the 29-25. So almost the exact
same thing. Great minds in the volatility space.
Yes, I think they saw my trade and then decided
exactly.
to copy it.
Your 12 lot inspired this 50,000 by 100,000 out there. I like it.
Correct.
I like it. Good stuff out there. So yeah, 1x2 put spreads. People for a while there. When vol had a certain setup, obviously everyone was fixated with the sell 1x2 to the upside. And everyone kept asking about that. But that trade hasn't really been in favor for a little bit here. But now, apparently, size 1x2 put spreads are all the rage. Let us know what you think about those, listeners, as we move on into your favorite vol product that all of you like to fade. That fade kicking in this week is down about 4 points from 2 weeks ago. So it seemed like it was getting some juice back. And then it finally gave it all back. Well, not all of it, but a good chunk of it. It's not quite threatening that 30 handle again. Talking about VXX, of course, coming into, as of a few minutes ago, is at about 32.75. That puts it down about exactly 4 points from where it was this time on the show 2 weeks ago out there. Obviously, when we started to see a little bit of that backwardation crop up in the VIX futures, that was no bueno for the old erosion play out there. But now that we're seeing VIX futures seemingly settle out to a little bit more normalcy, some of that juice coming back out of the VXX. In fact, it's dropped a little bit since the start of the show. It's down to about 32.5 now. So it's down about 4.25 handles from last show 2 weeks ago. About 122,000 contracts on the tape as of a few minutes ago. The ADV is 236, so it's a fairly active time out there in VXX land. Let's break down the top positions out here. First off, let's see what's trading today. About 10,000 of the July 34 calls and about 9,000 of the July 35 calls dominating the tape. So there are indeed some calls active out there in VXX land. In terms of what's dominating the open interest, you got to go all the way down to number 8 in the top 10 to find our only call out here on the list. These are the July 40 calls with about 17,000. Everything else on this list, 90-10 listeners, puts to calls. It's all puts. Let's just start at number 5 to save us some time. 23,000 of the July 23 puts. Number 4, about 27,000 of the July 21 puts. Numero trace here, 34,000 of the July 35 puts. We know what number 1 with the bullet is. In fact, spots number 2 and 1 are linked because it's that sized AUG 30 22 put spread. It looked good, then it didn't, then it looked good, then it didn't. That's kind of the nature of the beast out in VXX land right now. We said it before. If he rolled from the July 35 puts right before he did this. If he had held on to those a little bit longer, that probably would have looked a lot better for him out there. But hey, past is always prologue out there. Anything, Mr. Meatball, I know your crazies like themselves a little bit of VXX. Anything catching their eye out there as some of that erosion kicking back in, sir?
Yeah, July is going to have a little bit of erosion this week, especially as it heads into expiration. One thing to remember is that we have a really late July expiration this month. But with how firm kind of the back end has been, VXX has been pretty much spinning in place for a very long time. So my crazies have been trying to fade it, and it has not worked very well. It's been more of a trade than a fade lately.
I love how you call them the crazies now, too. It's a term of love, listeners. It's a term of art out there. We say crazy with love because, you're all crazy for trading vol, which is the kind of people we want listening to a show like this. Matt, a little birdie told me you got the backtest machine going. Oh, you haven't even touched on backtest. That's how much else you got cooking over there at Orats these days. But you do have that cool backtester over there. Little birdie telling me you've done a little bit of work on VIX versus VXX puts. So if you want to share some of that with our audience, have at it. Then we were talking earlier about earnings and a lot of single name action. I know in addition to earnings vol, in addition to dividends out there, you also like to track the put calls in some of these names, and you got some interesting findings as well there. So why don't you enlighten our audience on your recent findings on those two fronts, sir?
Yeah, listening to you guys talk about it, I went back and went to the back tester and tested my old trusty, since I live in New Hampshire, and that famous New Hampshire car license plate that said VIX puts. So, I have to test my VIX puts, and I was wondering, is it going to work better in the VXX or the VIX? So that's one of my favorite trades when things calm down. And the VIX actually outperformed the VXX. So in that little square of the world, we like doing the puts on, the kind of the long puts on the VIX. And another thing, it's, with Robinhood and all the calls trading and our friend Henry Schwartz has done some work on all the small calls that are trading. I was curious because I'm seeing a lot of puts trading, especially in the SPX. So I went back and looked at, okay, we have a chart, an indicator chart that shows, the call volume versus put volume. So we do the calls over the puts, and that ratio in the SPX is only 60%. So, it seems odd, but a lot more of what I would call the institutional trades are in puts. Now, if you then add a _C for us, that means all the components of the SPX, and you look at their averages, their weighted averages by the weighting of the S&P components, you'll see quite the opposite. You'll see that the calls outstrip the puts by almost 2 to 1, 1.9 to 1. So what that tells me is that in the smaller stocks and in the Robinhood type world, that's where the calls are trading. But in the institutional world, Mark, that's where they're trading the puts.
It's funny you should mention that because I was just talking about that on the option block earlier this week. We always run our top 10 most active single names for that day as of showtime, and it's always biased heavily towards the calls. All the names we talk about there, the Amazons, the Facebooks, the Microsoft, 65, 75, 85% of the paper is on the call way. I'm hard-pressed to think of the last time we saw a name, maybe a weird little esoteric biotech where someone was just shorting the hell out of, where the puts were leading the charge. It's almost always in those popular names the call. So what you're saying out there, Matt, maybe doesn't surprise me given the data I've seen, but on the institutional front, yeah, they like to do a little bit of hedging. So that doesn't surprise me out there either in that. What does surprise me, though, is that VIX puts blowing the doors off of VXX puts. We always talk here about fading VXX. It's kind of the trade du jour week in, week out on the show here. And it sounds like folks might be better off, Matt, putting their money to work in VIX instead, sir.
Well, yeah, I think that goes to the expectations of the markets and the pricing. So everyone knows that VXX is just kind of melting away, and they price the puts higher. So it's just that's where it's not really paying off. It's the pricing of the puts make the VXX back test not nearly as good as the VIX back test, Mark.
Yeah, that's something I've been complaining about for a while, and a lot of our listeners have as well. It does seem like the genie's out of the bottle when it comes to that trade that used to be pretty esoteric and arcane not too long ago. You talk to some random person on the street and say, hey, do you play that VXX erosion trade? They're going to say, what the hell are you talking about? These days, it's clearly gotten out. The word is out there because you're seeing those puts far juicier than they ever had. And obviously, it's moving a lot these days as well, so a lot of that vol is merited. But still, when the way they're biased, you're right, towards the downside out there, they're really squeezing any last drop of profitability out of those trades. Look at those guys doing those size put spreads, the 30, 22, and the 35 puts in July. I mean, he didn't make as much on those July 35 puts as you might think, given how much VXX moved over the time frame, just because how much he had to pay to get into that trade. That's something we've been saying for a while out there. Right now, sounds like, Mark, your crazes have a hard time lately fading as well. It's a hard trade. And everyone's up to it, so that makes it even harder. Let's see what else everyone's up to and what you guys have on your brain with a little bit of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, welcome to the Volatility Voicemail. This is where you guys ask us questions. We also turn our gaze upon you sometimes to see what you guys have up your sleeves. We thought, given where we are in the markets right now, it seemed an appropriate time to revisit our valuation and volatility poll, but do it in a little bit different lens. Obviously, a lot is clouding the future. We just talked quite a bit about the term structure in VIX futures and what they're pricing in from an election perspective. There's a pandemic, there's a potential trade war, all sorts of things gumming up the works out there right now. But we're also at pretty much at or near all-time highs in most of the major indices, which raises the question. Let's go back to that ultra-diverse index, also known as SPY. What are you comfortable putting on in SPY right now, given all these other things we know about the market right now? So we gave you 4 choices. Obviously, it's a Twitter poll. You're only limited to 4. We can't give you 100 like we'd like to. So bullish choice number 1 was just get naked long SPY. You want to dive right in and buy yourself some SPY. No hedge, no nothing. Number 2, bullish option number 2, a little bit more limited play, buying calls or some verticals in SPY. So maybe not putting all your capital to work, just some of it, maybe leaving the rest on the sidelines. Number 3, just going fully to the sidelines. Say, no position, I'm freaking in cash. I can't make heads or tails of this nonsense. And then number 4, you want to get a little bearish. You want to get long some puts or put spreads. Those are your 4 choices. You got a little bit of time left to vote out here if you haven't done so yet, listeners. Podcast listeners should have a chance to vote, I believe, as well. We'll still be live, I think, until early part of the weekend. Mr. Matt, you haven't had a chance to play yet, so we'll start with you. What is your vote if you have one? And then more importantly, what do you think our audience is voting for?
I'm going to have to pass, Mark. I want to hear Mark, who really knows this.
Pass. There's no passing. There's no passing in volatility, sir. There's no crying in baseball. All right, fine. I'll let you pull the You get 1 politician pass per year here. You just used yours, so you have to pay attention now for the crystal ball. All right, Mr. Mark, Mr. Option Rats has passed, sir. What are your thoughts on this poll and what our audience is voting for out there, sir?
I'm going to go for... I'm going to say option 3.
So nothing, you're in cash?
I'm in cash.
I could see that. I could see that one. I will say it's been live for a day or two here, and it has been, from the beginning, has been a certain direction to the voting. The level of lead has varied, but it's kind of always been in this one, which is number 4, bearish. Long puts and put spreads has been dominating the tape. It's not quite as dominant as it was earlier. It's about 35% of the votes right now are in that one. If you add in none, I'm in cash, which is number 2, then you're talking about pretty much 35 and 25%. It's actually 25.5%. So you're talking pretty much 60% of the voting out there is either not wanting to play at all or you're leaning bearish. And then the rest of you, number 2, going for calls or call spreads, 22, almost 23%. And bringing up the rear, only 17% of you saying you're willing to just dive into SPY at these levels. And I will say the caveat that our audience, a savvy bunch, and they've been fading this rally since the depths of March. We've asked you guys many times, especially when S&P was approaching 3,000 again. What do you guys think? And you all faded. You thought we'd be well below 3,000 out there. I can't say I blame you. Rational minds could certainly think that. So our audience does seem to lean a little bit more cynical, a little bit more bearish. We got a lot of rock lobsters out there floating in our audience, very cynical out there. But so far, at least, with some time left to vote, you guys got about another day or so if you haven't voted already. But yeah, it seems like bearish or not playing at all is leading the dance right now. Let's go to some of your other questions. Nick says, "Hey, vol dudes." Well, hello, Nick. What if you had a lady? You'd feel ashamed. Hey, vol dudes and lady. Are you excited about a VIX on TLT? And he sends a link to this article. I'm not sure. This might be Bloomberg. Talking about an $18 billion debt ETF powers revamp of VIX-like rates gauge. So that 5 times fast. You can look it up for yourselves, listeners. Talking about how SEBO is revamping their 10-year U.S. Treasury VIX. It's never really been a barn burner out there. Now it seems like SEBO and CME having a bit of a licensing spat. Maybe that's why we haven't seen OIV come back as well. A lot of you have been asking, how come we haven't seen OIV come back? Maybe there's something to do with that, because they could clearly calculate an OIV right now if they wanted. Crude is no longer negative, yet it is not being disseminated. So perhaps there's something to that as well. But they're going to be launching a suite of 4 volatility indexes with different tenors and based on the iShares 20-year Treasury bond, also known colloquially as TLT out there. That's a big one. A lot of you guys like to watch that one. So Mr. Meatball, I know you talked about TLT before. It's one of the ones you like to watch. Does this excite you at all, SEBO, going back to the Treasury VIX this time around TLT, sir?
What I worry about is that this, vol on TLT is a little higher than Treasuries, but still pretty low. And you can do a lot of what needs to be done. Most of the trading that involves Treasuries and the risk involving Treasuries does not come from the Treasuries themselves, but more comes from basis spread and some of the risks associated with holding a basket portfolio that is exposed to movement in interest rates, not from a name like TLT itself. Now, that being said, TLT is way high. So, I could see this getting some use. I do think that there are better places to start with this than TLT.
Yeah, I think we were discussing, I think it was a 10-year on TWIFO not too long ago. I think the vol out there was a 3. So you're not talking a huge volatility instrument to really sink your teeth into. But still, it might be interesting. Mr. Matt, any thoughts here for our listener? What was it? Nick wanted to know, are you excited about this, sir? A VIX on TLT?
Yeah, I think that's not a bad product. We have, some of our larger pensions and institutions are doing more and more in TLT. It's with the interest rates to where they are, it's a tough one to follow. And there's actually some volatility of the implied volatility in TLT. So I think it could be a fun one to watch, Mark.
I actually was too optimistic with my vol. I'm looking at the 10-year vol right now. It's 282, 2.82 in that front future out there on the 10-year, listeners. So not exactly. It gets all the way up to a whopping 460 on the D's contract. So, yeah, a lot of juice to squeeze out there. But, hey, TLT certainly might be a little bit more exciting. So if you're talking, are we more excited for this incarnation than the other here, Nick? Yeah, I guess so. Why not? Let's be optimistic here to close out the show. This is a frequent question people are popping in on here. We talked last show about the death of TVIX, Credit Suisse kind of getting out of that game, shutting down all of their levered ETPs out there. And people are asking this like Elbin. He wants to know, now that TVIX is gone, what vol products do you recommend? We'll only put the caveat out there that I don't think ever once in the history of this show did we recommend someone trade TVIX. It was never a favorite of ours. After February of 2018, it was kind of the last of the Mohegans, so people had to try to trade it if they wanted something in that category. But we never came on the show and said, hey, you got to load up on TVIX. In fact, if you listen to recent shows, we, the Meatball and others, were lamenting the dangers of TVIX, especially coming out of March and that explosion of AUM that it had. It seemed like it was heading for another collapse. So I can't recall. Maybe a guest did once, but I can't recall on the show us ever coming out and saying, hey, let's dive headlong into TVIX. That's where you need to go. But that said, Mr. Meatball, I'm sure some of your crazies like to play in TVIX. It wasn't optionable. That's another reason why we never really liked it. What are they playing in lieu of TVIX these days, sir?
Well, as our friend likes to say, UVXY. That's where a lot of the volume is going to head in the near term, at least until they launch one of these levered ETFs. And sounds like they're going to try and launch a levered ETF similar to TVIX in, the next 6 months to a year, similar to how they want to get an ETF that recreates XIV. So, but for now, the only thing that actually offers any type of levered future volatility is UVXY. And that's at 1.5 times VXX. Whereas TVIX was essentially 2 times VXX. there's a little bit of ether in the details that it wasn't exactly that, but that was what I was attempting to replicate. And
for our friend, I believe you're referring to Mr. Lincoln there of short vol infamy, who's one of the last people I know who's still floating around in UVXY and SVXY. He's always sending us tweets and comments about how upset he is about the prints he's getting out there. As I keep telling him, yeah, those products have been neutered, so a lot of the flow has gone away from them. But yeah, if you want something that plays in that realm out there, what was the name? I think, was it Nick? No, Nick was the other guy. It was Elbin. Elbin. That's pretty much the only game in town, at least until some of these other things come back online. In fact, David Lincoln, he was talking about him. He did chime in. We asked on our last show, can we really have faith in this startup, this Volatility Shares, that is creating this new, not just XIV, but also maybe a new TVIX as well? And he chimed in and said he trusts Volatility Stu. I guess that's his handle for this guy, Stuart Barton, who's one of the parties behind this new product. He's the real deal. So at least David Lincoln giving the vote of confidence there for these products coming forward. And maybe Elbin, if those things launch and get some traction behind them, you will have a real and indeed optionable flavor of TVIX, hopefully a better version of it to play around with as opposed to the former kind of crappy and indeed non-optionable TVIX that went the way of the dodo. Now it's time to see if we go the way of the dodo. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, let's get it out of the way now. We last prognosticated. We totally forgot that we had a week off in between, so we didn't prognosticate for 2 weeks. We prognosticated for last week when, of course, there was no show. So caught up in the volatility madness were we 2 weeks ago. We didn't even stop to think about that. So we were all a wee bit high. Mr. Rhodes was at a 35.5 out there and a 36 on VIX. Mr. Meatball was at a 32.32. He was the lowest. I was feeling a 37 double. And last, there actually was, of course, no VIX close or print last Friday or spikes. So they both closed on Thursday, July 2nd at about 27.5. 27.56 for spikes, 27.68 for VIX cash. Obviously, no winners. Our closest is about 5 handles away. So no winners on that front, which means this week we wipe the slate clean and we start again out here. Coming into the end of the show, we're seeing the spikes at about a 27.75 or so, and the VIX cash at about almost a similar level, about 27.65 out there. So not that far away from where they closed on July 2nd. So Mr. Matt, since you're our guest, and you didn't lose last show, you get to choose. Do you actually, no, you have to go first because you passed on the last time, so you don't get to pass again. So you have to go first, sir. What are your thoughts for this coming week?
A VIX 26.1. That's my call.
26.1. I like it. Quick, precise, good stuff out there. 26.1. So feeling a little bit more of this fade here to the downside. Mr. Meatball, you were closer than me last time, so you get to go next. What are you feeling for this time next week, sir?
So I got to say, I think that there's real odds that we see the VIX get over 35, certainly 30 next week. And I am going to say, in the end, we'll be just slightly up on the week. All right? So I'm going to say 28. All
right, listeners, that's a 26.1 from Matt, a little bit higher, 28. I, too, feel, no surprise, I've been kind of feeling upside for a little bit now. I too feel we'll have a little bit of a resurgence back above the 30 handle. I think we might hang out a little bit higher up there to come into showtime next week. So I'm not quite as high, obviously, as I was last time. So let's go a 31.26. So that's our market out there, listeners. Me north of the 30 handle, 31.26. Mr. Meatball playing the Goldilocks role at 28.28. And rounding out the dark side there to the downside, Mr. Matt feeling almost to a 25 handle, 26.1. All right. Unfortunately, that music means we've come to the end of another volatility journey. Well, what a crazy journey it was again this week, listeners. The market turning right before the show again, volatility turning. What's going on in the VIX futures? There still is that premium. What's going on with earnings vol? Spoiler alert, a lot. And it all kicks off this week with the financials and a bunch of other good stuff. Netflix coming up this week as well, so you can't get enough of tech names Netflix popping off this week as well. All sorts of good stuff. VXX, your questions about TVIX, all that kind of good stuff. Hope you enjoyed the journey with us. But before we go, let's go back around the horn. Mr. Matt, let's start with you, sir. If folks are intrigued and want to check out the earnings move results reports, the back tester, your dividend data, all the other stuff you guys have working out over there, where should they go? What should they do?
Yeah, there's a lot going on over here. We just announced a Tradier partnership where we're calculating the real-time Greeks and the real-time theoretical values, and we have scanners and all that in addition to all the stuff that we provide. I was giving a demo the other day. They go, wow, you guys do all that? Yes, we do. So, when truly smart guys like the meatball comes up with a strategy, you can come over to ORATS and test it out, Mark.
There you go. Like those VXX puts versus VIX puts. All you guys out there who've been lamenting the cost of VXX puts of late, you guys are onto something. So we do have a savvy audience. In the meantime, kick the tires, and light the fires over there at ORATSland, ORATS.com. Give them a follow on the old Twitters as well, at OptionRats. Easy handle to remember out there. And if you're looking at handles, Option Pit's a good one as well. Mr. Meatball, if I go to that realm, what can I find out there these days?
Oh, again, you want to sign up and make sure you're getting my vol newsletter, my free vol letter that I put out daily, and my free weekly market letter that I'm putting out. And just absolutely make sure you're signing up for all that, because you're going to learn some amazing things about volatility and analysis.
Volatility and analysis, optionpit.com, the place to go for both of those. And on behalf of Mr. Meatball and Mr. Matt and our friends over there at MIAX, you want to learn more about spikes, kick the tires, and light the fires over there, you know where to go. MIAXoptions.com/spikes. All the data you could possibly want to sink your teeth into about all things spikes related, it's all there in that one handy URL, including a link to a cool show called Volatility Views. So check it out if you are indeed so inclined. And of course, on behalf of myself as well, I want to thank all of you out there for downloading, streaming, subscribing, for listening live. Glad to see the Mixler kept working today. I know there were some issues earlier this week. Thanks for plowing through that. And we'll see you back here on Monday, when it all kicks off again for the option block, all the way through again to Friday for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.